Let's see how banking can create money and facilitate useful activities in the real economy. This simplified economy has got £110,000 in it. 100,000 is in the form of banknotes held by savers, and £10,000 is in the bank safe. And the savers decide they trust the bank and they're going to deposit the 100,000 into the bank. So the savers' cash goes down by 100, the bank's cash goes up by 100. All the cash is now in the bank. The savers will have 100 in their bank accounts between them, and the bank records a liability of 100. If those savers come back into the bank, they can demand their money back. So from the bank's point of view, it's taken the cash, it's got 110,000 in its tills, but it's got liabilities of 100 recorded, so its net assets are still the 10. So that's transaction 1. The savers deposit 100 into the bank. Now, the bank can do its other activity, so it's a deposit-taking institution, but also a lending institution. So a householder comes along and wants to borrow, let's say 90,000. So the householder gets a loan of 90. Let's just assume it's taken in cash for simplicity. The householder's cash goes up by 90. The bank's cash goes down by 90, but the householder's got an obligation to the bank. So from the bank's point of view, it's got an asset, and it's the advance made to the householder, 90. And the householder has a borrowing, the mortgage loan. The householder borrowed 90 and is holding that in cash. Now, the householder buys the house from a builder, let's say. Let's assume this is for cash as well. So the builder's cash goes up by 90. The householder's cash goes down by 90, but the householder gets a house from the builder. So the total cash in the economy is still 110, but there are bank accounts in credit held by the savers of 100. A useful asset, a home, has been built worth 90, and the bank has got an asset which is its loan, its advance made to the householder, and the householder owes that back. So the householder owes back the 90, so that's the householder's liability, and the bank owes back 100 to the savers. But now in the economy, we've still got all the original cash, we've got some financial assets and liabilities, the bank account and the mortgage advance, the loan, and a home has been built usefully.